The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. We're up 2 points in the S&P, cash at 2161. Volume is 2.11 billion shares. We got down to 2150 and change. And of course, there's no market that dips that they will not buy, and no breakout that they will buy either. So we're basically sitting here unchanged. Not a lot of volume, seeing some stocks and sectors with some decent weakness that haven't come back. So at least today is a good time to start looking at separating the wheat from the chaff. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And yes, the last thing that Walt Disney said before he died was Kurt Russell. No one knows why. And I was working on a couple of movies, and this was batted around for a while. I think last year he finally confirmed that that's what happened on one of the talk shows. I can't remember which one now. But no Rosebud. But Walt Disney, dying words were Kurt Russell. Who knows why? Things just happen. As always, we are waiting for the next drip of economic data. But at the same time, I continue to see weaker and weaker volumes as people continue to buy up the indexes and not pay much attention to the individual stocks, many of them showing some weakness. As we like to always do, we start off today with a little bit of history.
And it's all just a little bit of history repeating.
And I already got an email. Question: which movie was I on when we were talking about this? Universal Soldier. I think it was 1994, 1995. I'm trying to remember which customer we had that was working on it. I want to say Digital Domain. But I would like do a drive-by. We'd come by, crush the flesh with some of our customers, and move on. But that was the topic of discussion one day. I always thought it was very interesting. I was glad to see that it finally got settled one way or the other. But kind of a weird thing, though. What do we have going on for history today? On this day in 1977, more insanity. I thought today, in the last couple of days, and the idiots saying that we were going to Mars in 4 years, when they can't even figure out how to lift up any kind of shielding that would even get the astronauts alive to the planet of the moon. You may be the first person on the moon, but you will be a rotting corpse. But lots of money and nobody asking you any real tough questions tends to come up with some pretty insane ideas. On this day in 1977, flush with cash, Prince Mohammed Al Faisal of Saudi Arabia, addressing the first and last and only international conference on iceberg utilization at Iowa State University, declares his willingness to spend up to $100 million to ship multi-ton Antarctic icebergs to Saudi Arabia to provide fresh drinking water. And, of course, we can see how far that's come in the last 40 years. But what else can you say? There's always rich people prognosticating about insane ideas. Kind of have to look at those people that actually have something that's doable, that they could spend money on and not just wave magic wands around like they went to Hogwarts about. Every day I kind of wonder if anybody can get more stupid. And then I see some reporters basically saying that if this piece of paper gets signed, that will be the end of hurricanes. I cringe for our youth. I also think that they should just all shove us on an iceberg and send us off to die somewhere, since we're spending all their money and leaving them with almost nothing. But that's a personal opinion. This subprime auto news has come out. I've been talking about this for over a year. You could see this thing coming, like the iceberg that the Titanic hit if it was in daylight. The subprime auto loan market, things are turning very ugly very quickly. Delinquencies and losses have begun soaring. Specialized lenders, a couple of big ones, and a whole slew of small ones that surface the lower end and subprime market as slice and dice these loans. They repackage them and sell them to investors, a la 2007 in the housing boom. Such a yield-hungry pension funds are looking for any way to make money. They will soon lose most of it. Delinquencies over 60 days and higher among subprime autos increased 22% year over year and are now amounting to about 5% of the outstanding balances that Fitch tracks. Subprime annualized losses increased to 27% year over year, reaching 8.9% of the outstanding balances of auto ABS, which is one of the big ones. So what do we know? As I said, in my opinion, the recession's already started. For the most part, the cooked books by the government probably give, a 1.5%? I'm going to say 1.5% to 2% of GDP is cooked books. And probably why we really haven't moved that far as a country over the last 5-8 years, when everybody has enjoyed the wealth redistribution. But I continue to see little spits and spurts economically out here that aren't very encouraging, that don't say higher prices in the stock market. And more likely than not, higher interest rates will probably kill off subprime auto loans, and they should, sooner rather than later. That's about it, other than Jamie Foxx is down in Venezuela telling him just how great communism is. Isn't that nice? Reality is a horrible thing, isn't it? You got to go down there if you're Sean Penn or Jamie Foxx and tell everybody how wonderful socialism works, why half the people are eating out of dumpsters hoping to find anything to eat. But that's it. I guess socialism is all about just ignoring reality and inserting your own, as we say very often. That's it. Anyway, I'm just waiting for the day that Venezuela ceases to exist and everybody leaves. But we shall move on. Give me a call, 877-927-6648. Email me at path@tfnn.com and post messages in the den. What do we have going on here? Wanted to see how some of these stocks that have been pounding highs actually were doing today. We talked about Cabot over the last few days, tested its low of 1.2 million shares on 320,000 shares. Just 112,000 shares today. So keep an eye on that one. Don't like the energy that it had from August 3rd up to the high on September 29th either. We'll look at this and more. Give me a call, email me, put a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I reject your reality and insert my own.
Yeah, that's pretty the way it goes. People reject everything. And then they eventually figure out, you know what? Maybe I was wrong. Mostly when they're eating out of dumpsters. Okay. Am I good? Did I get this blown off? I think I just got blown off. Hang on a sec here. Not exactly why that would have happened. We will try setting everything back up again. Hopefully I'm on the air. Hopefully I'm back and up and running. Any questions? Okay. What else do we have here? Audio okay? Okay, good enough. I'm not exactly sure what's going on out here. Audio rates to the office show pretty good, but we'll move on. Questions about what's going on. My first email of the day is about the TLT. Do I still see 128 in it? Yeah. Would we probably have a little bit of a bounce here in this 133 area? Certainly, we got a little kind of a little hammer out here today. But that just means the easy money in the TLT is probably over. And the same thing probably with the dollar. We're probably going to see a concerted effort with the Treasury to hold this back down. But it's pretty much ready for some open field running, and even the Treasury is going to have a hard time keeping this thing from popping up, the dollar index from popping up another couple of bucks. But I think the bonds, I think everything is telling us that the Fed will raise in December. And as far as them understanding that a recession's already there, I don't know. They're so messed up already. They should have raised a year ago. Then they'll raise at the wrong time. Then they'll ease at the wrong time. Basically, economists, it's kind of like never having to say you're sorry when you're an economist. But you just go get your job at Goldman Sachs, and that's it. But they missed it a year ago when they should have raised. Now it is somewhat problematic. Good question is that we're coming in at least on lighter volume so far to the TLT September 15th low, 133.03. That was September 15th low, 15 million shares. Kind of into that right now with 9 million shares. But my guess is that the energy on this way down has already been strong. Today's just kind of a lighter day out here. Probably figuring that this is where they want to be going into the jobs numbers tomorrow. But my guess is we're going to probably fool around here at this 133 level, maybe 134 level, and then we're going to jump that creek, which is this big gap from about 132, low 132s to about the mid 133s. We're probably just going to pop over that one morning, my guess, and head down to the 128 area. At least that's the first look. We talked about trains, planes, and automobiles yesterday. Wanted to take another look at the trains out here today. If there was any volume, at least through this November 20th on CSX, $30.53, 18 million shares. We got a whopping 8 million shares so far, 8.3. So could we get 12? We might be able to. But I will point out two features. The energy from that November 20th high to the January 20th low was very extreme at 8.2 on my power law vector indicator number. The number from June 27th up to this high is about a 5.2. Granted, it started a couple bucks higher, but still should have been somewhere in the 7 to 8 range. Let's call it a 7 to have the same energy up. Not surprised to see very light volume. And just like all these with very light volume, they tend to pop right back into the trading range fairly quickly. What else do we have going on out here? A lot of spam. Check out my other emails. Oh, copper falling. Andrew Heck has a couple of new Seeking Alpha articles out. CVS Caremark, another one that tested its lows yesterday on lighter volume, but one of the reasons I can't buy is the energy off that August 2nd high did increase all the way to this October 5th low. I have two scenarios that I have to look at when the energy is coming down heavier, but you get the test on lighter volume, and that is you're probably going to get a bounce. It's probably going to be short, and then you're going to probably still get a retest. You want to have both the energy on the way down, not be strong. You also want to have the volume light. There are two parts to that, and the energy down tells you when it exceeds, but you get light volume, that you're going to have a consolidation period. It will not be, for the most part, a V bottom. You're going to get a little bounce like today, but there's no volume in it. So you've got to wait for this thing. This has been coming down since, what, the May 9th high? So I would say that you got, what, 4 or 5 months in it? Probably figure at least 2 months going sideways before CVS sets up a viable bottom, or at least midterm bottom. You can get some bounces out of anything for 1 or 2 or 3 days, but anything that looks like a trend, I suspect, is going to be a while. Dish Network's coming in on the light side out here. It does get the wimpy sign. It tested its previous high of June 7th, $56.60 to 4.4 million shares with 2 million shares yesterday. Energy was just slightly better off the lows, and you did have kind of a nice test of the lows. Again, the energy came down. I'm just suspecting this is in a bigger trading range between 48 and 56 bucks. DRE, Dr. Dre. What's Dr. Dre? Duke Realty Investments. As I said, I was starting to see some of these investment companies and REITs, especially ones with strip malls, and bigger malls start to show some weakness. And the downside, I thought that for the most part, they all look like they were in a bigger trading range coming back down to the previous lows. In this case, it'd be the $21.01 low back to April 27th. Does it happen all at once? No. It'll move up and down. The energy on this last leg, though, was intense from September 20th to today's bottom. So can you get some movement out here? You can. How many years has it been that BlackBerry has been going sideways and dying? They don't all happen at once. You know that they're headed down. Question is when. I just don't see probably a longer-term move. Maybe higher interest rates are all it's going to take to send a lot of these back down. What else do we have? We're going into break. We'll try to get everything else working again during the break. Give me an email at path@tfnn.com. Call me at 877-927-6648. I want to hear your dulcet voice. Post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back. Just got a note up from Microsoft. They're having some kind of problem with Skype. So we'll figure that out later. What else is going on out here? Yum Brands having a nice gap down on earnings. blaming it on the Chinese. It looked like a lot of people already knew what was going on ahead of time. It was down with 9 million shares yesterday. I have about 6 million charts. Okay. Let's see what else we can do to clean some of this stuff up. Here we go. Let me get this going on here. Okay. Get that one down, that one up, this one back. Hopefully we're back in gear. Anyway, Yum Brands down with, some decent volume during the market. Everybody apparently knew the jig was up. Down today, the volume's not all that much. I guess everybody's already figured out that this is where the support area is. The gap from the 14th of, was that August? No, July. And that was on 10 million shares. So you got 6 million shares. I don't know if it's that bad. Everybody, I guess they're not really believing that China is having problems, but I don't know. I suspect that this is going to get into this gap, and we're probably going to head lower in the markets anyway. And this is headed back down to the $81 level, where that gap, actually a double gap from was that June 29th, is the second gap. The first gap happened on June 27th. So you got a nice little double gap down there. I think that's where this thing's headed at about 81 bucks for Yum or Yuck Brands. Shouldn't it be Yuck Brands? Truth in Advertising. General Growth Properties. As we said, these property companies have looked pretty poor, but look like they're first getting into their first level of support. Energy on this one was just a little lighter. May 19th, 2602 with 7 million shares. We had 4.3 million shares and 4.7 million shares already today, so this needs to come in much lighter than 7 million. Energy was just a little lighter, so I'm not looking for this thing to break the $26 level just yet, but I wouldn't be a holder of this. If it bounces, the energy could come back in the next leg and break through. Again, that entire sector looks fairly weak. I'm not sure if it's just an Amazon issue, if it's a higher interest rate issue, maybe more of a societal change, i.e. kids not hanging out in malls anymore. Hard to tell. Car auction sites. We talked at the beginning of the show about the problems with especially the subprime loans in cars. Car auction services. You would think that this was going to do better, I would imagine, right? You got more repos, they get auctioned off. Maybe, maybe not. Maybe that's not the way it works. July 26 was the high at $43.91 with 2 million shares. Got into it yesterday with 1.2 million shares. Energy was a little off of this August 3rd low to this high. Not tremendously bad, but I'd have to do some more research on that particular company to find out whose cars they're auctioning off. Kennametal, heard some discussions about U.S. Steel today. This one's kind of bucking up against previous highs. The October 8th to 2015 high, 29.45, had 1.4 million shares. December 1st got into it with 1.1 million shares, and the threw the baby out with the bath water. Was cut in half down to the January 20th low of this year at 15 bucks. It's worked its way back up here. The energy on this leg, and this is really horrible on long-term charts. Let me move these down a little bit. The energy down from that December 1st high to the January 20th low, which remains untested, by the way, is horrifically huge. You get back into this July 7th low back up, there really hasn't been any energy, and it looks to me like a stock that's been pushed up on very, very light energy. Well, let's take a look at U.S. Steel real quick just to get a chance to look at this. Well, and this came off with the highs, bounced a little. Man, this certainly looks like it's going to go down and test the May 19th low at $12.77. Kind of tough to say. I just don't see much in here that talks about that. We'll go to some of the other ones. Laredo Petroleum. This was another one that's testing its highs. $13.73 on May 5th. 9.7 million shares. October 6th, which is today, all day long, by the way. $13.93, so it spiked above it. It is now back below it, 4.6 million shares. So about halfway through that on Laredo Petroleum. Let's take a quick look at the OIH. Yeah, you're back up into these gap downs that happened with some energy. Man, the easy money in OIH is certainly over. You had some nice days of strength off the bottom, off that lower gap, which is acted by it. You did have lighter volume from the May 19th low on that September 27th low. So yeah, it looks to me like another product out here that is most likely stuck in a trading range. I can't see that. You'd have to have something big happen, like war, I think, to get oil above this level. Live Nation, LYV. This thing kind of came back from the dead for a little while. But again, another one of these stocks up here with light volume. Yesterday, it did pierce it by 10 cents. That's the July 29th high, $28.10, 4.3 million shares. Got into it with 1.4 million shares. Which of these things are not like the other? 4.3 million shares, 1.4 million shares. Anyway, light volume, a little doji out here today. Keep an eye on Live Nation. I think that one is perpetually heavily shorted, though. So it may not be. Make sure and check that. Now, here's one that always gets me looking at the market and actually getting ready to sell the farm and short the market with everything I got. And that is when these big broker dealers cannot get any volume at previous tops. Also, where the energy back up to those tops is next to nothing. As I will commonly say, the biggest signal I've ever seen in the market happened on May 5th of 2008 or 2007? 2008, when every single one of the broker dealers, Fannie Mae, Freddie Mac, every single one of them tested the previous high on half the volume. There wasn't anything out there that didn't do it in that sector, in the housing sector. Everybody apparently knew. No one was buying it. The end was nigh. Anyway, the December 7th, a day that will live in infamy, and Raymond James had almost 1 million shares in 2015. Yesterday, we tackled it with an amazing 470,000 shares. Energy from this July 6th low has been pathetic. We will be back shortly.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hey, we're up 2 points in the S&P cash volume at 2.3 billion shares. Volume is all but practically stopped over the last 30 minutes. Not exactly sure what they think are going on. I've seen more volume before an FOMC meeting, which is very interesting. Again, they'll push this market up, but they have a very hard time at making the retail investor drink and, of course, buy any more shares. Everybody wants to buy every pullback. No one wants to buy any breakout. Twitter gets the losing horn today. As I said yesterday, I never really understood the idea of why Twitter, a company that continues to lose huge piles of cash, is worth anything. We have another company that does the same. It hemorrhages money left and right. We'll take a look at that. But does it make any sense to actually buy Twitter? A lot of people after the bell last night said we don't really have any interest in buying it from Disney and others. And, of course, it fell some 20% today. Question is whether or not it was ever worth this, or if this was a giant plan to run all the shorts out and make a fairly easy job of getting out of Twitter for maybe a handful of people in this. One of the reasons you don't want to be in these stocks unless you've got real staying power and being short. I almost looked at getting short this yesterday, but I just hate these stocks that are so news driven and you really don't have an idea. It could have been another couple of days before everybody poo-pooed the idea that Twitter would only be worth $1 billion because, of course, it's the thing everybody talks about and few people use. Anyway, I don't understand buying businesses that don't make money. Maybe there's, at the very beginning, biotech startups and stuff. If it's either going to be successful or not. And these, you pretty much knew for a while, right, what the earnings power of Twitter has been public for a couple of years. The real exception is something like Facebook. The rule is Twitter. That is, if you can't make money before you go IPO, you're probably not going to be making money after you IPO for the most part. But down on heavy volume today, not as heavy as you would think. Hope springs eternal. Many people out saying that if Twitter does get sold, it will not be until next year. And I don't know if that helps them at all or just puts a kind of nail in the coffin that no one cares. But if I was running a company thinking about buying Twitter, I would think again and start my own version of Twitter and use all those extra billions for marketing. I can always quit advertising if it doesn't go well. If you spent $20 billion, you're already in for a penny, in for a pound. What else do we have out here in some of these stocks that are interesting? Sanmina had a nice little gap down. And they had to run this thing right back up. The energy has not been all that exciting. This came down on the 26th of July with 3.5 million shares. We're up back up to the previous high that had 700,000 shares with 127,000 shares today and 260,000 shares. If people are asking me why I am bearish, it is because there are far too many of these stocks. And, we run out of volume at this time. The people at the end of the day, what are they doing? The people that know, they're selling at the end of the day. We'll see what happens today, but I just don't see a lot. SLV will check back in with that one today. As I said a couple of days ago, it's heaven or hell in the gold market. Don't be in a big hurry to buy anything. This is going to take a while to settle down. I'll look forward to Tom O'Brien and Andy Heck's discussion about gold, but my guess is that this thing's kind of come down. It's back in the lower trading range now. Could it spend another 6 months or a year trading in the lower range? Yeah. So I wouldn't get too, you'd have to have the Fed freak out, say they're going to negative interest rates, I think, and of course, maybe doing a few other things like yet another round of QE to get gold up anytime soon. There's just too many people right now, I suspect, on the wrong side of gold. You need to let those folks out at the lower price. And once those guys are out, then it's time to come back in. I just don't know how long that's going to be. But my guess is that this is fairly bearish action, which means that you could easily see the previous lows in SLV. That's the June 1st low. What else do we have? Winghouse. Wanted to check in on that. We talked about some of these that did not look all that bad, but almost all of these are coming back to these double gaps. Wingstop actually did that today. Not a bad looking chart. So maybe some of these retail places that don't depend on retail traffic, basically people stopping on the way home for dinner, might not be a bad looking chart. But this is actually, there aren't a lot of good looking charts in this marketplace. A lot of crowded trades, but Wingstop doesn't look all that bad. You got very light volume. It's come back. You had a sign of strength. You have everything that you want in this chart. I don't have the market with me, but you got a nice move up and a nice retracement out here. You're back into exactly where this thing should be, and the volume is almost vapor compared to this big gap up. This thing gapped up on the 5th of August with 1.5 million shares. You had this coming down with 184,000 shares yesterday, just 90,000 shares today. It doesn't take a rocket scientist to figure out there's not a lot of people dying to sell this right here. I got to take a drink. Nothing like good red punch. What else did we have that I wanted to look at? I wanted to look at Amazon. The big men of the street continue to short sell this stock like they know something's going on. This did get to a higher high today. Volume is going to be lighter, as it is everywhere in this marketplace because we just don't have anything. I guess maybe we truly are waiting for the jobs numbers. I just can't imagine they're going to be that much different tomorrow. The foreshadowing by the Fed and the discussions this morning would make you think they're going to be better than a lot of people think. Could the economy actually be retracting and jobs be a little better off? The answer, strangely enough, is yes. I'm going to try to get into this tomorrow. But you could see that. You could see jobs getting a little better and the economy getting worse. And that could just be from overspending up to this point with the very light interest rates and everybody buying HD televisions for the Olympics, we may just see something just slightly different. Well, we only have a few minutes to go, precious few minutes. In the meantime, if you're in Florida, do you have 20 gallons of water for every person in your house? Do you have extra gasoline to get past the state line if you get evacuated? Do you have a wind-up radio?
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had a question about what stocks would do well if the hurricane does end up being a big one. There's a couple of stocks that you probably want to look at, but generally, Generac Holdings, which makes generators, does fairly well. They had a nice little volume day out here today. You'll see this thing, especially if you're a day trader, generally a good lot of money to be made in this one. I missed seeing it. It already started moving, or I would have bought this thing. And, you know, if you owned it at 34.5 or 35, you can sit through it. Now I think you just have to day trade it. But this thing moves a lot, especially in the coming days. The other stock that you want to keep an eye on is Home Depot. Lowe's does not do this. I'm not exactly sure why. But you have a nice pop in Home Depot today. I was actually driving by one of the Home Depots, and they had all the trucks lined up, everything ready to go over to Miami if everything goes to hell in a handbasket. Trucks full of plywood, full of water, full of everything in the world. Everybody, interestingly enough, is off today, or they gave most of the people the day off at the local Home Depot, getting them ready for tomorrow and the days after, where they'll be able to move huge amounts of stuff that they can sell almost instantly over in Miami if things get tough, or over in the whole eastern seaboard, actually. Both of these are the ones that are going to be movers interday and nice traders, depending on how the hurricane comes in and what happens. If you're looking for a little bit of action in a market that seems a little bit flat, watch for these for the next few days. One last question. I don't see anything else changing out here in these markets. And I'm just going through the emails real quick here. Do I see any changes? No, I don't. I still suspect that we're going to break through the 2140 level. That snap will take us probably fairly quickly to 2090 on the S&P cash, and then after that, fairly quickly down to probably under 2,000 on the S&P cash. And that's just higher interest rates, declining economy, and it's not. I'm not talking about end of the world recessions. A recession can be a 0.01 below growth for 3 straight quarters. I just think that we're probably going to have very light volume for the first 6 months of anybody's administration, that they've held this market up way too long, and actually raising rates is probably going to be the things that actually makes this market come back with a lot of fervor. But until we get markets that actually apply money in the correct fashion, not by where the Fed is trying to push it with lower interest rates, there's always a little bit of unintended consequences. As we said at the beginning of the show, you start seeing those, and what I think more than anything scares the Fed is not a little bit of a recession, but the kind of risky taking that you see with the subprime auto loans, other things like that. And right now, they would much rather take a little recession the first year of somebody's presidency than a big recession for the next 4 years and find them all outside on their rear end. Anyway, that's about it. We're all waiting for the numbers tomorrow. We're only up a point or so in the S&P cash. Volume, as we said, is next to nothing. So we're going to have a very light day out here, pushing higher once again. And we'll see if it's like yesterday, where the sellers all decided to click the sell button in the last few minutes of the day. See you tomorrow. Same bat channel, same bat time. So when you can.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.